Hi, Jim Gore from Thor Wealth Management. For the last 15 months, we've seen commodity prices go up, and we think this is only the start of a multi-year trend. If you look at this chart, this is looking at the Bloomberg Commodity Index going back to 1990. And you can see that it peaked in 2008, and it's dropped significantly all the way until COVID began. So you saw a 12-year bear market in commodities. As a matter of fact, when COVID hit, the commodities were cheaper than what they were 30 years ago. And we've seen an increase now in commodity prices. And we think that that is going to continue forward, and we're going to be more like in a time period from 2000 to 2008 after a 12-year bear market. And the main reason for that is energy. Energy is a big component of commodities. It's also a big cost for any commodities to be taken out of either the ground or for planting. Energy is quite expensive and a big cost that goes into that. So what happened in the energy sector and why we think that prices are going to go higher in the future? Well, if you look at this is looking at natural gas prices going back to the mid-1990s. And you can see that it went from about $3 to $13 a unit for natural gas, similar to what we saw in commodities on the first chart I showed. But since then, we actually saw natural gas prices go down significantly, and this was because of a technological change. Back in 2008, the estimates were that we had 20 years of natural gas supply in the United States. That jumped up to over 200 years because of technology, fracking. We were able to get natural gas that we weren't able to get before, and we saw natural gas prices go down to almost down 90%. But you also notice here, since COVID has hit, a big increase in natural gas prices. So we actually broke the peak back in 2010. So it's a higher natural gas prices that we've had for 10 years. And we think that this is going to go higher, and I'll explain that at the end of this video. The other thing is that if you look at another commodity, and this is why we think you're going to see higher inflation, especially from imported goods, is looking at the price of coal. So this is looking at coal going back to 1990 again. Coal increased in value all the way to 2008 and dropped during that time period to to the beginning of COVID. Now here again, it was a 12-year bear market. Natural gas brought that around. Why did that happen? Well, a lot of energy companies were using coal-fired power plants. Natural gas prices dropped dramatically, so companies, they did something green, but really they did it to help their bottom line. They switched over to natural gas because it was a cheaper form of energy, and because of that, we saw coal prices go down because there's less demand for coal. But look at what has happened since the end of COVID. This is a huge increase. As a matter of fact, coal is up fivefold. All of us should have just been buying coal back in March of 2020 and just sat on it. We'd be making 5 times our money on that investment. And we're actually peaked over 2008. Now keep in mind, India and China are still using coal-fired power plants. So their input costs for energy have gone up dramatically in China. And so you're going to see increased costs in the future. Now, the reason why we think that energy prices are going to continue to go higher rather than go down is because the policies that we have right now are anti-fossil fuels. If you look at the administration right now wants to put a 50% surcharge on the cost for getting any fossil fuels out of federal lands. Well, that's going to increase cost. I've seen estimates in a couple of articles that a home heating cost for fuel are going to go up anywhere from 15 to 18% if Build Back Better comes back into play and it is voted on. Well, that's going to increase costs for everybody. But the whole thing is the administration is not giving incentives to get out fossil fuels. Because we're having incentives, if anything, there's disincentives. They're trying to have banks not lending to fossil fuel companies. So there's things out there that are going to actually increase costs for getting fuel out. We're going to get less fuel out of the ground. And because of that, you're going to see higher prices, which means we're going to have higher inflation, which means that this is going to be a several-year increase in commodity prices going forward. It's something that we want to make sure that our clients have some protection in their portfolio as we see commodity prices go higher. If you don't have commodities in your portfolio, you should be looking at investing in those commodities. If you have any questions or any concerns, as always, reach out to us, either call us or reach out to us on our website. Take care, and I look forward to talking to you in a couple weeks.